Welcome to Wall Street Confidential. We're discussing what it really means when financials say that they, quote unquote, have enough capital. We've been hearing it from Citigroup, Merrill Lynch. Jim, some investors think that this now means that these banks are investable. Are they right or wrong?
I don't see that to be the case, Farnoosh. I think that what's happening is you've got systemic risk and earnings risk. These companies are taking off the table the systemic risk by continually raising capital, tapping pretty much their same shareholder base, making so that they're less likely to become the next Bear Stearns. But as far as the earnings, which I think is the main reason why people buy companies, you're diluting your capital, you're diluting your shareholders terribly. So I think I think that the banking situation is helping the rest of the market, but not helping the investors. Citigroup, I think, will be very challenged to be able to have good earnings. Bank of America, Wachovia. Bank of America and Wachovia both need to do additional financings. I say that because Countrywide reported yesterday they obviously are in trouble. And there's some pretty good articles about the Wachovia financing where they were basically you could pick a way to pay, and those loans are starting to go bad. So the banks need more capital. It is readily available to them from the chumps, to call it that, who are the investors. But I certainly would not want to own any of those stocks.
There are some exceptions to this, though, right?
There's
there
only
are some
three exceptions.
Hudson
City Bancorp, and they're able to pay their depositors low rates because of the Fed. They pay that Fed funds rate. And they're able to loan at, say, 6.5, 7, which is a really good spread, set 6.5 to 2 and change. Goldman Sachs, we know they're not capital constrained because they continue to buy back stock endlessly. And JP Morgan not capital constrained courtesy of the Fed and that Bear Stearns acquisition. But everybody else is suspect, and everyone else, I mean, if Lehman stock went to 48, 49, if it got to 52, they would raise capital. I believe they should raise capital. Wells Fargo, if the stock were to increase, I think they need to raise capital. Now, no one admits that they need to raise capital. Merrill Lynch on its conference call said it didn't need to raise capital, and then it went and raised it. Citigroup's been saying everything's fine, then it went and raised. I don't trust the managements, but I do trust that the market's better for all the fundraising they're doing.
All right. Thank you very much, Jim Cramer. You're watching Wall Street Confidential. Please stay tuned.